So welcome everybody. We are going to be making a technical analysis session right now. But before we start, let me just mention that after technical analysis, CySEC says are going to be discussing account types, while even later on, Antonius is going to be discussing practically the calendar of the day. Now, let's go to the charts. Let me get started with the US dollar. That's nice. This is the USD index for our chart, people. Let me readjust this. So we have practically a sideways movement. Let me just note that we have a number of higher lows which should be mentioned here. Let's have a look at them. There you go. On the flip side, we have an upward trend line, which, sorry guys, there you go. So this trend line practically, which seems to be guiding high lows, but the price action seems some resistance at the 102.75 resistance line. It's characteristic how it was tested earlier today during the European session. There you go. So we have a wedge which has started to form. It's an upward wedge, which, should things go as planned, we may see the price action actually breaking above the 102.75 and start aiming for the 103.25. It's an interesting formation which should be kept in the notes. Higher than that, and should the bulls actually take over and start running things, we may see the index starting to approach the 103.95. Always note this is the 4-hour chart of the USD index. And as the ultimate target for the bulls, we set the 105 resistance level, which is a nice round figure and has provided resistance around the 13th to the 15th of May. To the downside, and should the upward trend line be broken, we would require clear breaking of the 102.05 before calling in the bears. Should the price action bounce or actually not be permitted by the 102.75 to continue any higher, stabilize, break the upward trend line, yet remain above the 102.05, that would be a sign for a switch from a bullish outlook in favor of a sideways movement between the 102.75 and the 102.05. For a bearish outlook, we would require a clear breaking of the pre-mentioned upward trend line. That would be one. Definitely a breaking of the 102.05. And the index to start aiming for the 101.30, which provided support around the 31st of May. Lower than that, we have a mid-level at 100.50 and even lower, the S3 at 99.80. It's quite interesting chart of what's about to happen here. Note how more condensed the price action becomes. Also note though that the RSI indicator below the 4-hour chart is above the reading of 50 and tends to imply that bullish sentiment may be taking over, given also that there is a slight upward slope here. So we may be implying that the RSI indicator, the oscillator, is actually supporting the idea of a bullish movement for the index. Let's have another look now at EUR/USD. But before we move to EUR/USD, some of you guys asked to have a look at USD/TRY. Let's find this. It is. Oh, good one. Good call, everybody. Let me readjust. Let's see what further resistance lines we can find. Drilling down to the 1 hour chart for more precision. One hour chart. Here you go. In red. And that's going to be the 1832. Let me make some readjustments here. Let's have a look at the daily chart. That's better. Actually, I was a bit worried about the distance between the S1 and the R1, but given the movement during today's European session, definitely the pair could go higher. It had a movement of 46, 406, 431 pips actually, which is quite substantial. So let's readjust these levels. Placing the R1 now at 17.60. The R2 at 18.32. I'm going to be placing another one at 1900. First support line. 16.40. Second support line. 15.74 being the third support line. So we have a clear upward movement guiding the pair in more. Could read something like, but I wouldn't get them. There you go. A beautiful upward trend line. Could be with a steeper slope, but still it's valid. So we tend to maintain an upward trend line. Note the steepening of the upward movement as the price action of USD TRY has broken above the 17 resistance line, now turned to support. We tend to maintain a bullish outlook for the pair, but, and it's a big catch we have to note on this, the RSI indicator is substantially above the reading of 70. Actually, it should be around, so look, 83 right now, which is pretty high. yes, definitely on the one hand, that reflects the bull's dominance. But on the flip side, it's also telling us that the pair may have reached overbought levels and may be ripe for a correction lower. So that should not take traders by surprise. Definitely on the fundamental level, given Erdogan's insistence on low rates, with the possibility of even lower rates coming, say for example, should CBRT cut the 1 week repo rate even further, that could practically cause further inflationary pressures. Mind you that inflation is running very high in the Turkish economy right now, and could devalue the TRY even further, thus leading practically the pair upwards towards the 17.60. The record level to the upside would be the 18.32, while even higher we have noted the 19 round figure as a possible target for the bulls. Now, should the pair correct lower, the initial market reaction may drive USD TRY below the 17 support line. Now, for us to switch our bullish outlook, we would still require a clear breaking of the upward trend line, albeit I would like to note the steepening right here. So some stabilization could come into play below the 17 support line, but for a clearly bearish outlook to prevail, we would require a clear breaking of the S117, break also the S2 by breaking also the pre-mentioned upward trend line, and the price action to dive lower than the S2 16.40, with the ultimate target for the bears being the 15.74. It's a beautiful chart, guys. Thank you for calling in this necessity right now. The time was perfect. Let's have a look now at Euro USD. Euro traders await ECB's interest rate decision tomorrow. Let me readjust this. There we go. Euro USD maintaining a sideways motion between the 1.0740 and the 1.0625. It's pretty clear that the price action remains confined between the pre-mentioned levels, so we tend to maintain our bias for a sideways movement of the pair between the two levels. Excuse me. Should the market decide that the direction of the pair's next leg would be to the upside and the bulls take over, we would require for a switch from the sideways bias towards a bullish outlook for the price action of the pair to break clearly above the 1.0740 and start aiming for the 1.0935. To the downside, and if a selling interest is being expressed by the market, now to switch in favor of a bearish outlook, we would require a breaking of the lower boundary of the current sideways movement, the 1.0625, and for the price action to start aiming at the 1.0480. The RSI indicator seems to remain close, but just below the reading of 50. The Bollinger Bands seem to be converging, reflecting practically the lower volatility of the pair. Definitely, all signs are for the time being in favor of maintaining a sideways motion. But Euro traders, mind you, have started to focus, to readjust the focus this time towards ECB's interest rate decision. That's due tomorrow. And we may see the ECB maintaining a hawkish stance. We'll have to discuss more details about it during tomorrow's session. That could drive the euro a little bit higher, but that remains to be seen. Let's have a look at the pound. Once again, in a wider move, but still in a sideways motion. Let me readjust the labels, please. Yeah. So GBP USD cable is practically moving in sideways motion between the 1.2610 and the 1.2470. I would like to note that despite the jump yesterday, cable was not able to actually even test the 1.2610. It was just a bit lower, and that could lead to a readjustment of the R1 maybe. Yeah. With the current price being at 1.2035, which practically seems to be revolving the price action around it. Should the bulls take over, would expect the pair to clearly break the 1.26 and start aiming for the 1.2775, which provides the resistance here, while even higher we note the 1.2965. To the downside, and should the bears take over, we would expect the price action to break the 1.2470, which provided support once, twice, false break here, 3 times, and start aiming for the 1.23. Note the support provided here and here. Lower than that, and practically the lowest level in the chart would be the 1.2165. So we overall tend to maintain a bias for sideways movement, given also that the RSI indicator remains pretty close to the reading of 50, implying a rather indecisive market. Let's have a look now at USD JPY. Still rising, actually steepened its rise since yesterday. This is USD JPY's 4-hour chart. Let's readjust our support and resistance lines. Definitely the 133 becomes now support line as it has been broken. Note that we are talking about a movement beyond a 20-year high. With the next support line, resistance line being placed 136. Could go higher than that. 137. 6.5. $135 being the second resistance line. $134 being the first resistance line. Note that we have moved fundamentally into territory which is actually quite provocative for Bank of Japan to intervene in the markets and try to drain the international markets of JPYs in order to actually provide some support for its currency, maybe even defend it a bit, but that once again remains to be seen. So just keep it in mind. It's a possibility which could happen, and that would practically force USD JPY substantially lower, should the market intervention of BOJ be of considerable size. Let's have a look now at the 131.35. And the lowest level would be the 130.25. Practically, as we're moving into new 20-year highs, we're moving into uncharted territories for USD JPY, given that levels 20 years ago may have little relevance to today's price action. So I would be highlighting the 134 as the next possible target, 135, widening it up a little bit to the R3 at 136.50. To the downside, we note the 133, which provided resistance here and has now been turned to support line, given that the price action has moved above it. Lower than that, we note the 131.35, which provided also resistance once, twice, and may have been another considerable resistance line, which has now been turned to a support line. And even lower would be the 130.25. I would like to see how this would work out. How wide is this? 120. Beautiful touch here, and resistance touches here, here, another support touch here. Oh yeah, this could be more valid. Let's close on this one. Get it? So we tend to maintain our bullish outlook for the index, for the pair USD JPY. Note we're still in the 4-hour chart. The RSI indicates their chart, yet at the same time, the RSI indicator implies that the pair has reached overbought levels and may be ripe for a correction. So that should not take by surprise traders. It's a possibility which should be priced in by you. And should the bulls actually maintain control, we may see a breaking above the 134 and start aiming for the 135. Once again, on the fundamental side, don't forget the damage which the Japanese economy actually suffers from the weak that corporation profits which import raw materials get squeezed, while at the same time inflationary pressures within the Japanese economy tend to accelerate even further as all imports automatically become more expensive. And that may force BOJ to start considering a market intervention in order to defend JPY. We are at such levels which could practically provide grounds for BOJ to intervene. Let's have a look at USD CAD. Sorry about that. There we go. Nice downward trend line guiding the pair. Okay, this is no longer required. There was a stabilization here, but the downward trend line prevailed and price action continued lower. It's actually, let me readjust these. So here you go. We have a downward movement, which is quite obvious. The RSI indicator remains well between the readings of 50 and 30, which underscores the presence of the bears for the pair. But it still implies that it may not have reached oversold levels. Note on a technical level how the price action had started to rise and actually tested the 1.2615. It was not able to clearly break above it, so it was forced lower and has tested the 1.25 excuse me, 1.2535, which practically reaffirmed the validity of the R1 1.2615 as a resistance line, but also the validity of the 1.2535. We maintain a bearish outlook. Note how beautifully the price action bounced on the lower Bollinger Band at the same time with the 1.2535 and corrected a little bit higher, providing enough breathing space for the bears to make another move, another test lower, another swing at the 1.2535 and possibly break it, in which case we may see the pair starting to aim for the 1.2565. To the upside, and should the stabilization occur, we would expect the price action to remain between the 1.2615 and the 1.2535 initially. An early signal that the price action has changed trend would be a breaking of the downward trend line. Let me extend this a little bit. There you go. So for stabilization to take place, we would expect the price action to rise, break the downward trend line, yet not break clearly the 1.2615, respect that level, and that would confine the price action between the R1 and the S1. Should the bulls take over, we would expect the price action once again to break the downward trend line, break clearly also the 1.2615, and start aiming for the 1.2685. It's a beautiful chart as well, people. Once again, bearish outlook, and the bears seem to have further room to go lower. Let's have a look at the Aussie. AUD/USD. It's interesting that the price action had practically broken the upward trend line. It's actually now revolving around the 1.72 level. Let's make some readjustments here. I think this is valid. Let's narrow it a little bit. Actually, no. I'm going to keep this. So you have 1, 2, 3 resistance lines, with the first one being set at 0.7265. The R2 being placed at 0.7340. And the new resistance line is going to be placed at 0.7465. Up here. Now we have a new support line being set at 0.71. That's 55. We can check that again. Do not see it clearly. skipped the 0.7125, and the next support line would continue to be the 0.7035. With even lower, we note the 0.6950. For the time being, we maintain a bias for sideways movement between the 0.7265 and the 0.7155 to the downside, and should the SR1 be clearly broken, the next possible level would be the 0.7035, which provided substantial support here and resistance here. Once again, support here, so it's quite a valid level. Lower than that, we also note the 0.6950, and this would be the low point of the price action. Now, to the upside, and should the bulls take over, for a bullish outlook, or to be more exact, for us to switch our bias for a sideways motion in favor of a bullish outlook, we would require a clear breaking of the 0.7265 right here, and for the price action to start aiming for 0.7340. To the upside, we also note the 0.7465. Once again, a beautiful chart which provides the opportunities to make profits at the highs and the lows. Also note the RSI indicator, pretty close to the reading of 50, also implying a rather indecisive market. Let's have also a look at gold. Okay, here we have to make some readjustments. Give me a sec. Now, the R1 seems to be standing at 1870, tested here and here. The R2 at 1903 seems also to be standing, and the R3 at 1937, that's pretty wide. I would readjust it far lower, somewhere here. Let's have a look. Yeah. Definitely look how practically the price action here provided the resistance. Sorry, the level provided here resistance to the price action, while here it was a support line. Oh, multiple touches. If we move to the upside, no guys. Yeah, okay, I can see the support lines here and there's some resistance here, but no. Let's go lower, somewhere here. And that would be the 1920. Focus. It's not that the prior level is not valid, it's still valid. However, I would be placing another support line in the middle. Sorry, resistance line in the middle. And to the downside, we could readjust it here. Yeah, because it has a prior support line here as well. Let's do that. So the fill line is being placed at 1835. No, that's too wide. 36. That's another support line being placed at 1807, and the last support line being placed at 1787. We have a nice wide range bound movement for around $35. It's actually 34 to 35 for gold's price, which seems to be valid. And the price action, the main body of the price action, practically falls between those bands. Note that The volatility for gold's price has been reduced. It's characteristic that the Bollinger Bands have started to converge, so we tend to maintain a bias for a sideways movement between the pre-mentioned levels. Also note that the RSI indicator is running smoothly along the reading of 50, once again implying a rather indecisive market. Actually, the precious metal seems to have been caught in conflicting fundamentals, more or less. To the upside, I would note the 1870, the 1903, and the 1920. More levels are present, I know it, but I think these are the most valid ones. To the downside, we have the 1836, the 1807, and the 1787. It's a nice, beautiful chart, people. So that should sum it up from our side. From IronFX and everybody here, best wishes for solid trading.
Hello everyone, my name is Emily and welcome to another short walkthrough of our website. Today I'll be showing you a little bit about our partnership programs. So let's get started. As you can see here, this is our home page and I want us to go right here where it says partners. So last time I said that it's extremely important for us to build a long-term business relationship with our clients. So this is a great way of us doing this with you. So let's get started with the introducing brokers, also known as IBs. So let's go down and see what are introducing brokers. So let's read it together. Introducing brokers, or IBs in short, are independent broker dealers acting as agents whose task is to introduce new traders to a brokerage firm such as IronFX. Introducing brokers earn commissions calculated from the traded volume of the traders they introduce to the brokerage firm. It's in the best interest of the introducing brokers for their clients' trades to be profitable because the more they trade, the more revenue is generated for the IB. Then we move on to revenue and market rebates. To make their offerings more alluring, IBs often give market rebates to their clients, usually by sharing a percentage of their generated revenue with them. Market rebates are perhaps the main reason why some traders prefer to trade with a brokerage firm through an introducing broker. Moving on, we have the IB monthly reward plan. So you have different options right here. We have silver, gold, platinum, and diamond. Let's get started with the silver. We have the ranking, and then you go to qualifying net deposits, minimum trading volume, number of new clients, and cash reward. So for silver, qualifying net deposits, $5,000, minimum trade volume, 50 lots, number of new clients, 3 to 7, and cash reward, $100. Moving to gold, it's $10,000, 150 lots, 8 to 15 new clients, and $250 cash reward. Moving to platinum, we have the $25,000, 250 lots, 16 to 25 new clients, and $500 cash reward. Then the last option is diamond. And then we have $50,000, 400 lots, 25 plus new clients, and $1,000 cash rewards. Then all you have to do is first visit our marketing hub to get your unique referral link. Get new clients to sign up via your referral link. The more referrals trade, the greater your chances of earning rewards. So what I want you guys to do if you decide to proceed with our IB program, if you don't have any experience, it's completely fine because, as I said, you have the dedicated account managers who are here to help you. And also you have our support team that you can always ask any questions you want, and they will be able to assist you throughout the whole process. Then you have more IB benefits here. You can go through it at your own time. Then also here you have why become an introducing broker with IronFX. So we have awards, IB portal, and support. You will also have marketing materials. And then here you have trading benefits for your IronFX referrals. So for example, right here you have market products, trading platforms, security, transparency, exclusive bonuses, promotions, and more. You can always contact us and be able to assist you throughout the process. Then I want us guys to move on to affiliates. So on affiliates, just give it a second to load. So what is affiliation? Affiliation is a third-party marketing in more simple words. So you as an affiliate, you need to have an online presence. So you need to have a website or strong social media, or have, let's say, an academy of yours, and etc., etc. So you as an affiliate, you can earn commissions from your referred traffic to us. You see, this is a different website. It's a website dedicated to affiliation. You see here how it works, payouts, affiliate marketing. You have market analysis, SEO strategy, marketing tools, you have support. Also here you have academy, blog, and about IronFX. If you scroll down, you can see here how it works as well. Why partner with us, and etc. and etc. It's super simple for you to sign up as an affiliate. It's exactly the same process of signing up as a client. As I said, if you have any questions, you can always contact our support team and we will help you through the process. Then I want us to go back to our last option, which is white labels. So I will explain it in simple words for you guys that you don't have any experience. So white label is basically an arrangement to market and sell an already existing broker's platform as if it was your own. So if you're looking to jump into the industry, you can do that without having to start from scratch. So here we have reasons to white label, more reasons to white label. And then we have why choose the IronFX white label solution. You can benefit from robust and highly competitive trading environment based on deep institutional liquidity that will allow you to provide your clients with spreads and swaps starting from 0.0 pips and up to 1 to 1,000 leverage on over 200 tradable CFD instruments from 6 asset classes. So you have features here. You have trading account types, trading platforms, multiple accounts, customer service, leading authority, and trusted broker. So as I said, for you guys that you do want to start, you do want to jump into the industry and create your own brokerage, this will be a very, very nice way of doing that for you, because it's very important that you don't have to start from scratch. I understand it's very, very difficult to start a company brokerage. It's not like opening a store, for example, for clothes. It's different. So we will be able to assist you with that. We will help you into creating the best possible version of your vision when it comes to that. So that's it for today, guys. When it comes to our partnership programs, as I said, we as a company, we would love to have our clients as our partners. It is very important for a company to invest to their clients and to be able to build good business relationships with them. And if you go through our partnership programs, even if you don't have experience, if you have experience, that's great. You will be able to understand more about it. As I said before as well, you can always contact us by our support team. You can email them or just click over here and chat with them. So that's it for today, guys. Thank you so much for joining me once again, and can't wait to see you. Until then, be safe and have a very, very good day. Bye-bye.
Hello, everybody. Welcome back to another episode with myself. Again, my name is Antonio, and today we will be having a brief discussion in regards to fundamental analysis and the economic calendar, and of course, how the trader can use the economic calendar to their advantage in order to understand what's going on around the markets and around the world geopolitically. Now, every single country has announcements that they come out with, some on a weekly basis, some on a bi-weekly basis, some only once a month. There's a variety of different events, and I will explain a few, again, on all countries across the world, but we tend to focus on main markets and main countries that markets more than others. So the market, the Chinese market, the Japanese market, Australian market, the UK market, the French, the German, the Italian. These are the main movers of the global economy, as it were. And depending on what announcements they have and what announcements come out, all from official government bodies, of course, they have an immediate effect for the short term, always on the markets. Some creates a lot of volatility, some create less, depending, of course, on the announcement. Now, economic calendars can be found on all major investment sites. That's investing.com, FX Street, Bloomberg, Yahoo Finance. All major investment and financial sites do have the economic calendar. Most of the times, personally, I tend to use the investing.com calendar, as I find that it has all the events from the least impactful to the most impactful, and they're quite fast when the results come out. So I find that is a good tool to use. Now, how does one use the economic calendar to their advantage? So a very plain or a suggestion that could help someone strategize themselves and put themselves in a kind of trading schedule, as it were, is what I personally do. And that is that every Friday, I open the economic calendar for the next week, the next following week. So I have a view of all the next events coming from Monday to Friday next. Then through the filter, again, all sites have these filters. I'm using specifically investing.com economic calendar. From the filter, I select all countries and I select on the 3-star events. That means that the 3-star events are expected to create major volatility in the market. And of course, that is beneficial to the trader because volatility means opportunities. Opportunities to trade means potential profits. So let's talk about today, Wednesday, June 8th. We've had so far this morning 3 major events that have come out. The first one was from Japan, very early in the morning at 10 to 1 GMT, and it was the GDP for Japan for the first quarter of the year. The GDP is the gross domestic product, which basically measures the difference in imports and exports of a country, and it shows how healthy, booming, or slumping their economy may be. Now, the way that the economic calendar always works is that you have a forecast. A forecast is the expectation of the figure depending on the analysts throughout the whole world, major banks, and the governmental bodies themselves, what they're expecting. That's the forecast. So the forecast for today's GDP from Japan was at negative 0.3%. Now, as soon as the announcement came out, you had to be ready to trade. The announcement came out at negative 0.1%. That is more positive than the forecast was. As a result, the fact that it was positive is a healthy sign for the Japanese economy. And as a result, as soon as the announcement came out, for a short period of time, to 5-10 minutes, we saw a rise in the Japanese yen. So a trader would choose what assets they wish to trade on. That could be USD JPY. It could be CAD JPY. So the Canadian and US dollar against the Japanese yen. Could be the euro against the yen as well. So let's say, for example, in all 3 examples that I just said, USD JPY, CAD JPY, and Euro JPY, we have the JPY being the second currency. So that means that if it was positive for the Japanese yen and we were expecting the Japanese yen to rise, then we would open a sell position on the 3 aforementioned assets. Why? Because as the yen rises, its counterpart, which is the USD, the CAD, or the euro, goes the other way. So a trader would be looking at their economic calendar. As soon as the announcement came out and they saw that it was positive, they would sell. Within the first 3 to 5-10 minutes, they would generate a potential profit, and that's when you leave the market. Thank you for my profit. See you next event again. Okay? Keep in mind that how much you can make all depends on your account type, your account level. So someone that's got 10,000 in their accounts and exposes 2,000 to trade on the event, they're going to make more potential profit than someone that has only 500 in their account. That's just mathematics, and that's just common sense. More money makes more money. Okay? Obviously, being safe, it is the kind of events that help you because they give you the direction. So you know from a governmental body whether it's positive or negative. So that was the first opportunity that a trader could take advantage of today. Then at 5:30 a.m. GMT, obviously we're a global company, so people in Australia and in Asia could trade these events more freely than someone in Europe, okay? And vice versa for the European and American events for someone in Asia. That's just time differences. So at 5:30 a.m. GMT this morning, we had the interest rate decision by the Bank of India, okay? No major changes there. They expected to keep it at 4.80%, and they rose it for 0.10% to 4.90%. So that means that they're giving higher interest rates to banks in order to be able to give out more loans and so on and so forth. So again, that is a healthy sign for the Indian economy, and the Indian rupee had some volatility and some movement when that announcement came out, which traders, of course, could take advantage of. Now, at 9:30 this morning, which we were all up and working, we had an announcement from the UK, which was known as the Construction PMI, the Construction Price Manufacturing Index. Basically, this gives you an understanding of how many construction items are being sold and being used overall in the economy. So if this is a higher amount, then you're expecting more building to be going on, and vice versa. The forecast for this specific event this morning was at 56.6. The actual announcement that came out, though, was 56.4. So as a result, this was considered to be negative, and we saw a very small but sharp drop in the British pound. So British pound against the yen, you would sell. Target to make a potential profit and get out. CAD JPY, Euro GBP, the euro against the pound, you would buy that as you would expect the euro to rise against the pound on that specific event. So these are three events that happened today already, and what happened and how clients took advantage of that and traders targeted to make a potential profit off of that. Now let's talk about an upcoming event later on this afternoon at 3:30 GMT, 5:30 Cyprus time. This is an event that comes out every single week on Wednesday, and it is the crude oil inventories. It is one of the biggest events that come out every single week. As I'm sure you know, oil makes the world go round, not just money. And obviously, depending on what the announcement is, it has an immediate effect on the markets in regards to oil. So what is the actual announcement? Crude oil inventories is basically a figure that comes out from the governmental body in the US and tells us how many millions of barrels of oil the US has in stockpiles, in its inventory. And of course, like before, it's positive or negative. So the forecast for today is at minus 1.917 million barrels. If the announcement comes out and it's positive, so it's closer to zero, then that would be positive. That means that they've used more oil. They don't have as many barrels of oil in their inventory. And then we go to classic demand and supply, right? Which means there's less demand. There is less supply to meet the demand. Okay, as a result, the price is expected to go up. And vice versa, if it is more negative than 1.917 million minus, then you're looking at means that they're using less. They have more inventories, so there's more supply to meet the demand, and you would expect a drop in the price. Of course, keep in mind that geopolitical events like the war between Russia and Ukraine, which is still ongoing, the production of Saudi Arabia on oil does come into play as well right now as these things are going. But 90% of the times when it's just the announcement coming out, it has an effect immediately on oil. So a trader would either buy or sell crude oil or Brent oil depending on the announcement as soon as it comes out. Now, for the rest of the week, for tomorrow and for Friday, there are a few major events. For example, tomorrow at 12:45 GMT, we do have the ECB, the European Central Bank's monetary policy statement, along with their interest rate decision. It is expected to stay the same. However, of course, you never know what could happen, what they could decide, because as they're discussing about it, it creates a lot of volatility in the euro and the eurozone. So that is something that traders will be able to take advantage of. Then later on in the afternoon tomorrow at 1:30 GMT, we have another major event that comes out once a week out of the US from the Department of Labor, and it is the initial jobless claims. And basically, this is an announcement that measures how many people have made a claim for unemployment over the last week in the US. And again, of course, if it's less than expected, the forecast is 210,000. So if less than 210,000 people have made a claim for unemployment benefit over the last week, that is a healthy sign for the economy. That means that more people actually have jobs and not claiming jobless benefits. If it's more than 210,000, then that's negative, and we would expect to see a drop in the US dollar. And of course, Friday, we've got the interest rate decision from Russia, which is expected to drop even more, as they did drop last time as well, from 14 to 10%. Obviously, the fact that they're in a war right now, it does make sense for them to drop their interest rates in order to get a bit more cash flow in the country, as it were. So that is an opportunity for someone to trade on. And then closing out Friday with the core CPI in the US, which again basically gives a sign of the economy, how it's performing at its core. And of course, the last one for Friday at the same time is the Canadian employment change, which is the same as the initial jobless claims, but it affects the Canadian dollar. Okay. Now, when all of these events come out, most of them affect the dollar or a local currency. So when a German event comes out, it affects the euro and the German DAX. However, across the board, no matter what country it comes out from, it always affects the dollar as well, because that currency will always be affected with the dollar. So if it's a European event, Euro USD will have the most volatility. If it is a Japanese event, USD JPY would have the most volatility, and so on and so forth. As a result, most traders tend to focus on trading on the dollar and correlated assets, because the dollar is king. It is, the most capped currency in the world. So as a result, it always has correlated assets. So when the dollar goes up, certain assets go the other way, such as the euro, the yen, gold, and oil, to name a few, and vice versa. When the dollar drops, these tend to rise. So there's always an opportunity for the short term. And why am I talking about the economic calendar? Because most clients, most traders are busy. They work. They've either got a 9 to 5, they've got their own businesses, and so on and so forth. They don't have all the time in the world to just sit in front of a screen, do analysis, both technical and fundamental, and decide what to trade on. Otherwise, they would be professional traders, and that would be their job. But for the average Joe, the normal person that wants to take advantage of the markets, because as I've said before, the financial industry moves over $6 trillion a day. So there's a lot of money that goes around and can be going around if things are done correctly. So again, why am I speaking about the economic calendar? Because for people that they don't have a lot of time, they don't have millions and millions to invest, but they do understand the opportunities in the market, and they can find themselves 5-10 minutes free, whether it's on their phone or on a computer, to take advantage of an opportunity, which is why, again, I said, I like to do this on a Friday eve. So on a Friday eve, I have a look at what the events are for the next week. So I know, okay, I can't take advantage of, let's say, for example, the initial jobless claims tomorrow at 1:30 GMT because I have a meeting. But I will be able to take advantage of the crude oil inventories later on in the day. Or I can't take advantage of the crude oil inventories later in the day, but I can take advantage of the Russian interest rate decision very early tomorrow morning before I go to work. So that's the beautiful thing about looking at the economic calendar in advance. So you can actually put down in your agenda and your calendar those 5-10 minutes free that you have to take advantage of these major events, because they're very good for the short term and they can benefit you when things are done correctly. Obviously, you do need to understand how it works to be able to understand as soon as the announcement comes out how to go and apply it, which is why we're here. So please do get in touch with us. We'd love to teach you how the economic calendar works, how trading on fundamental analysis works, and how you can potentially get in and out of a position in order to target, of course, a profitable situation while keeping the risk at a minimum. As always, we would love to answer those questions and help you out. You can get in touch with our support department, and your dedicated account manager will give you a call to help you out. So that's it today for the economic calendar. Again, you can find it on various websites. Personally, I use investing.com. It is amazing to know what's going on around the markets and what events can affect at that point for the short term and sometimes for the medium term as well. In order for you to not waste too much time, get in, get out, enjoy yourself a potential profit. Thank you again. See you next event. Keep in mind, there's about 85 major events across the board in all countries every single month. So out of 85 events, I'm sure you can figure out to trade a few if it's going to benefit your account. The more you trade, the more opportunity you give yourself as well. So keep that in mind. Once again, thank you and see you next time. Bye-bye.
Our live session has come to an end. Thanks for watching. Catch the next one tomorrow at 12 p.m. Enjoy your day.